Well, hi everyone. I'm here with Julia, and Julia was very kind to share with us about her financial journey. So I will be asking her some questions, and Julia will be answering. And it won't be really, I think, a formal interview. Um, we will just chat about life and finance. Hi, Julia.
Great. Hi, Lena. It's good to see you, my friend.
Thank you. Thank you. Where are you? Where are you located right now?
So right now I'm in Seattle, Washington, in the US. We were in Madrid for 2 years and we left at the end of December. And so we've been back in the States for 3 months. Hard to believe.
Time flies. It goes
Yeah.
very quickly. Well, Juliet, can you please tell us a little bit about yourself?
Yeah. Well, I'm an American and in my late 50s, I'm married. Actually, we'll be married 30 years this August. Um, and I have two grown children who are 23 and 26. I retired from formal work around the age of 50. Well, actually 52. I worked for 25 years in leadership with nonprofit organizations or NGOs, as they're more commonly known internationally. Um, and about 5 years ago, my husband had the opportunity to take a position in Singapore. So we left the US then after our two kids were off at university and moved to Singapore during the pandemic and lived there for 2.5 years. And then another opportunity came up to move to Madrid, and we said yes. And so we had the great fortune to live in Madrid for a couple of years before relocating back here to be closer to family. Yeah.
And what about your financial knowledge? Were you educated in finance?
No, yeah. Well, I guess you would say maybe a little bit. I have a degree in political science and economics. Um, And my interest when I was in university was really from a looking at the world from a political standpoint. Um, I grew up in other countries. My father was a geophysicist for an oil company, so I had a lot of international exposure. And while I had a lot of interest in what was going on socially and politically around the world, I had zero knowledge about finances, um, certainly from a certainly from a personal level. Um, my family did not talk about money, and I think that's pretty typical. I grew up where, I'm sort of embarrassed to say that things were really taken care of for me. And um, it was a typical family where my father made pretty much all the decisions and really did not educate me on finances. And so I felt when I was graduated from university and set out on my own, I had really no idea where to start in terms of thinking about my own financial future and how to secure it. Um, and so for many, many years, and I got married in my mid 20s, and I would say for many, many years, we really just routinely saved, but to no particular end in terms of being strategic about how we saved our money. We both um, contributed to employer retirement plans with no strategy around it. Um, and I can share a little bit more about sort of what happened from there if you would like.
Yeah, I think you already kind of started telling us about your financial journey, and I think we're very curious to hear how it went from there.
Yeah. So, um, when I think it finally dawned on me and us that uh, we got married when we were 28 and um, we were approaching 30, and we're thinking, okay, at some point we'll have a family. Um, and in the United States, there is no one safety net. So it's very unusual to have a pension plan, for example. Um, and you really, there is a social security program, but it's almost impossible to live solely on that. Um, and so it dawned on us, we need to start thinking about making a plan for how we're going to save money and enough money so that one day we could actually retire. And then around that time, we received a gift from my parents of $20,000. And it was like, okay, what are we going to do with this? And neither of us really knew the first thing to do about it. I mean, we knew, well, we really probably shouldn't just stick it in the bank. We should invest it. And so we asked around and found a financial advisor who invested it. And I have no recollection of being very directive in that other than we want to save it for the future. Um, and at one point, I saw that it had basically dropped by 50%. And I just panicked. And so we thought, no, no, no. Well, now we really need to get serious and we need to find somebody we trust. And we cycled through one more advisor who didn't feel like the right person. He felt like he was attached with one particular company. And I just felt like we were getting spoon-fed a formula. And so then asked around more. And by this point, I was in my late 30s. And we found an advisor that we really felt, a trusted friend had told us about her. And we really felt like we could trust her. And she was very good. And she taught us a lot of things, really not just about our own financial situation and how to put a plan and together. And she ran numbers and it made it clear to us how we could build a nest egg to get to a retirement point. Um, but she also had us get the rest of our financial house in order. For example, we put at this point we had two young children. Well, let's get a will and let's get directives together so that we can take care of our young children if anything ever happened to us. Um, and she advised us to get life insurance so that again, if something happened to one of us, the other could support our family. And so we did several things that I think really helped to put together a foundation on which to build. Um, and I um, I was the the thing about it is, and it's sort of segues a little bit in working with you, Lena, is I felt completely bewildered by what our finances were doing. So after we got our financial house in order and basic plan in place, we got into a routine of where we would meet with her once a year. And I know she was trying to educate us. Her role as an advisor was pretty much to be that person who completely took care of your money for people who didn't want to spend time doing it. And so she never really got into the weeds in us around what was happening with our money. And so my husband has had more of a financial background, and he understood. We'd go into these meetings and he would understand exactly what she was saying. And I would leave there just bewildered, like, what exactly is happening with our money? We could see that it was growing, but it wasn't clear to me how that was happening. And I am a detail-oriented person and I want to understand. And yet I felt like it was too hard for me and too complicated for me to understand. And that really bothered me. And I think it really, as a I don't know, just my own personality, and perhaps it's because, or as a woman, I just sort of deferred and said, well, you're the expert, you take care of it. And Tom, my husband, feels happy with it, so it should all be okay. There were a couple of instances that I remember, well, in my journey to try to understand finances, um, there was a point I had left my work, and this brings us up into my early 50s. Um, I had left my work and we knew we were moving to Singapore, and I had about a year before we were moving, and I wanted to do something to occupy my time. And because I was interested in learning more about finances, I thought, and I didn't know where to start. I really didn't. I mean, there was no clear place for me to talk about it to somebody who wasn't biased, to somebody who didn't want to sell me something. And so I thought, well, I'll go to school. So I took some accounting classes. It was the worst, most miserable time, honestly, of my life. And I will say, accounting is helpful for bookkeeping, and it's not necessarily helpful for understanding investment strategy. Um, and so for anybody who's contemplating that, I think, well, if you really want to spend a lot of time learning how to do debits and credits, by all means, but it's not the place to focus your time. So, but there was one class or one session in a class that was about investments. And that was where I really perked up and was most interested and thought, why can't we talk about this the whole time? And but the net result, what I got out of it was two things. One is um, the adage, buy low, sell high. And the other is if you really don't want to spend time doing this, um, hire somebody else to take care of it for you. And so that sort of stuck with me like, okay, well, we've got that, but I'm dissatisfied. So that's not going to work for me. Then there was around this time, I went to Singapore before the pandemic really got, where borders were shut, to help my husband look for an apartment. He had moved there before I did. And because our daughter was finishing school. So, um, and this is when the stock market was starting to really go down because of the pandemic. And one thing I should say is my parents had both died, and my father had died um, a couple years before we moved to Singapore. And so I had received an inheritance. And this money we entrusted our advisor to take care of. And we had left some in cash, and her thinking was, let's invest it, do dollar cost averaging, where we would invest a little bit every month to take advantage of the peaks and lows in the stock market. And I thought, when I saw that the stock market was going down, and I knew we had cash sitting there, and I remembered this could be an opportunity, I reached out to her and said, hey, isn't this an opportunity to invest some of that cash that's just sitting there? And she said, yeah, let's do it. And I thought, well, wait a second. Why am I bringing this up? And it dawned on me. I mean, I didn't know how to invest it, but I just thought maybe we should do that. And I thought, well, she's not looking at this the way I would. Like maybe she's not looking at it as closely as I am. So that was the first time when I thought, wait a second, maybe I should get more involved in a way that is beyond entrusting her to take care of everything. And then there was another time when we had a tax accountant who was doing our taxes here in Seattle, and she said, the one thing I don't understand is why you have so many how much capital gains you have. And again, and I'm embarrassed to admit this, but it's my story and perhaps, other people's story too. I didn't realize that, at least in the United States, the income, you pay taxes on any kind of all your streams of income, or any stream in which money is made. And when I heard capital gains, I really just heard gains. And I thought, well, that's good, isn't it? Well, if it's a realized gain, meaning something was sold, even if it was reinvested and there was a realized gain, we were going to it would have implications on our taxes and put us in a different tax bracket in the United States. And I was embarrassed at the time to say to her, I don't know, but I thought, well, there must be a reason for it, but I didn't know the reason for it. So those two moments, it just made me think, wait a second. I want to dig more into this and understand it. But again, it took me a really long time because I just didn't know the first place to start. And that brings moving to Madrid.
That's
And
when we met.
that's when we met. Yeah, yeah. So we met 2 years ago. We were actually on a hike with an expat group. Um, and we in our conversation, you told me what you did, and it piqued my interest. I will say the Women Investors Club, it made me think, oh, I should already have knowledge about investments in order to be part of a women's investors club. But when you explained to me that a lot of what you did was educate women, and that you were independent, and that you um, were really about the educating and empowering, that's when I think I reached out to you and said, well, how does this work? And can we talk about this? Um, and what I really loved, well, first of all, you're delightful and I have enjoyed getting to know you. But you were not, there were two things. One, you were not judgmental whatsoever about what uh, what my basic knowledge was. Um, you completely, um, understood where I was coming from. And yeah, I mean, I think, as I've said in the past, I was sort of embarrassed by my lack of knowledge. And you made me feel very comfortable about that. And that a lot of people are, and a lot of women are. And and so that was the first thing that I felt a connection on. And the second was you weren't trying to gain my business or in terms of managing our finances. Because I think when I've talked to advisors, in fact, I just went to a class here on retirement planning. And, it was an advisor who was doing the class, and you could sign up for a 1 hour strategy session with that person. And I thought, no, 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 I'm not going to sign up because I know that it's just a ruse to start to work with him. But I'm going to get what I need to from this free class. And then, that's the end of it. And so with you, I never felt any of that. And, um, and so it was really 2 years ago or almost 2 years ago that we started working together. And it was very much just a one-on-one time of my goal was to remove the mystery of what was happening in our finances. I wanted to be able to read our financial statements and understand what was in them. I wanted to get a better sense of what the strategy was. I mean, things you would think that I could have asked our financial advisor, but I never felt that she did it in a way that was clear to me. Um, and and so that was really, I would say, part one of the work that you and I did together, which was just for me to dig into the platform that we had and to just see where we had investments. We had 80 mutual funds. And I still remember your reaction to it, which was, whoa. And I thought, yeah, I mean, is this deliberately trying to confuse me? Because that's how I felt every time I looked at it. I was like, okay, this is a really complicated plan. And maybe that's how it has to be. And there's just no way I'm going to know how to pick 80 different funds to achieve our goals. Um, but that was part one. And I would say we concluded part one because I really wasn't sure that I wanted how much more I wanted to dig into it. And we also had come back to the US, met with our financial advisor, and and had yet another what I felt was unsatisfying leaving of that meeting. And I just felt like we didn't have a real sense of what had happened with our money other than the overall figure in it and that it would had gone up. Um, and so I think I came back to you at that point and thought, okay, you know what, Lena, let's do part two and really dig in and start to understand what's happening here. And that's when I did the beginning of, I would call a 1 year process of my financial education in journey. And this is what I really, want to share with people is, it's not hard. Um, I think when we are confronted with things that seem challenging, um, a good place to start is just educating yourself, reading, learning, talking. And so I did all of that with you. So that's when I took all of those 80 funds, downloaded them into a spreadsheet, and under your guidance, started to dig in to really see what was going on there. And each time we met, I felt like you spoon fed me a little bit more to think about and dig into so that it wasn't overwhelming and that these were good steps to take. And I learned about looking at how have these funds performed over the last 10 years and where to find that information easily on the internet. Um, I looked up the prospectuses for every single one of those funds. I now know you don't actually have to do that. You can go to Morningstar or other places and it will help you find the numbers you're looking for. But for me, it was good to really understand what is this information that these funds are sending to me um, quarterly or whatever it was. And and I found out about the administrative fees involved in it. I knew how much we were paying our financial advisor because she charged a percentage, 0.5% of our entire assets under management. But I didn't realize that each individual fund had its own administrative fees. And I also looked at, what's the turnover rate? And so how are each of these mutual funds, each has a fund manager that's buying and selling stuff. And when that's happening, that can have tax implications. And that goes back to what our accountant was saying is, hey, there's all these capital gains. You're having to pay for it, even though it's not going into your bank account. So you're not seeing that money. Um, and and that's when I did all of this research and realized that on an annual basis, I could basically hire an employee based on what I was paying for those services. And I didn't feel like I was seeing the results of that. Um, I'm fine paying up people to do things. I think that's completely, right to do that if their services are worthy of it. And so I just didn't feel that way. And again, then working with you, I learned about another approach to how we could manage our money through index funds. Um, and uh, and so I just felt like I got to a place and then you recommended books to read. I read all of them. And now they're my sort of six go-to books when people ask me, I share them. Um, and you I think you could see, I mean, it was very empowering for me to get to a place where I felt like I had so much more knowledge and education and confidence. And um, and at one point, I remember you saying, you're kind of enjoying doing this, aren't you? And I'm like, yeah, I really kind of am. Yeah. And you said, well, you might want to read Warren Buffett's letters to shareholders because they're kind of interesting. Yeah, okay, so I have read the last 10 years of his letters to shareholders. I will be very sad when he passes away. He's in his 90s and but he writes in such a way that it is not bewildering. He's very straightforward, he's very practical, he sticks to his principles, um, and they're kind of entertaining to read too. So I kind of nerded out on all of this. Um, you know what? The other thing, Lena, I will say about in working with you that I appreciated right from the get-go, you also shared with me your financial story. And I remember you went to a fancy MBA program. And so you're, well educated right from the beginning, but that you wanted to invest some money and you had gone, if I'm getting this right, interrupt me if I'm not, but that you had talked to some banks or firms to do that. And you were as baffled as I was about what they were offering. And you said, you know what? I'm going to do this myself. And I thought, well, if she is baffled by this with her fancy degree that I don't have, maybe I can figure this out too. And so, and then the other thing you said is financial institutions make money for one person, the financial institutions, not for you. And so that's when I thought, you know what? I'm going to start asking people that I know and trust, um, who I believe are managing their own money, what platforms they're using to do it. And so that was about not even a year ago. It was actually, well, no, it was about a year ago. And there were three different platforms that I looked at where individual investors can basically manage their own money. And I made the decision to go with one firm, and I don't think I need to share it here because I don't want to people have there's different options internationally. But after talking with a friend of mine who I admire and who manages their money, and he's in a completely different wealth bracket than I am, but I thought, well, if he can do it, I can do it. And I talked to, he did have a point person at this firm, um, who you can just go to. I mean, you have to have one person, so that's sort of your go-to, but isn't managing your money. He can do that too, but can bounce like questions off of. And I talked to that person, and I felt like this is the right place to do it. Um, Over the course of the year, I should also say I was asking questions of our financial advisor to try to get a better sense from her perspective, what all the fees and everything that were involved in the services that she was providing to us. And I also remember at one point she said to me, "Wow, Julia, you've really learned a lot." And it felt a little patronizing or condescending, but um, I thought, well, yes, I have. And then it was last May that I just said, we're going to do this. And I talked about it over with my husband, and I sort of presented the plan with him. And the one thing I'll say, I remember him distinctly saying, and we were in Madrid, and you and I were talking on the phone. And after our conversation, Tom came out of his office, home office, and said, you have a completely different persona when you're talking to Lena. You have so much more confidence in what you're saying. It's really impressive. Like, I mean, obviously, this is something that gives you energy, and so I, yeah, I just felt like I was getting good um, reinforcement along the way. And so Tom and I talked it over, and he was fine with this decision. I mean, I was able to sort of lay everything out and show him in numbers how much we were paying and what my plan was, and then made the decision to transfer everything from our financial advisor that we'd had for, I don't know, 20 years, over to a different investment platform and begin to self-direct it. And I notified her, and you coached me through all of it. I think you even coached me, Lena, on how to tell her that we were breaking up with her, terminating our relationship. And it was great because and she was she was good with it. And I mean, I I need, I'm a people pleaser, so I don't want to hurt anybody's feelings. That's not necessarily a good thing for business, but that's the way I am. And I just realized, wait a second, this is our money. We can do with it what we want to do with it. It's fine. I don't need to hurt her feelings. This is completely a business decision. And um, we did have to liquidate a lot of funds because I also realized that many were proprietary to the firm that she used, or the custodial firm that she used. But I could see anyway. I I transferred everything. What I also had to do simultaneously was come up with our own asset allocation and what funds we wanted to put everything into. And you and I worked together on that. I also bounced some ideas off of this other person at the firm where we put all our money, and came up with a strategy. I liquidated 65 of our positions and had a huge chunk of cash to deal with, and knew how I was going to reinvest all of them across 10 new funds. Um, I kept retained 15 of our old mutual funds because of the capital gains, realizing capital gains implications for our taxes. But the rest I liquidated and then had to make a decision. Do I reinvest everything right now, which was last June, July, or take that approach of dollar cost averaging and do it every month, but do it by the end of the year? I made my goal to do it by the end of last year. And I decided to go that route. Um, in hindsight, either would have worked fine. But for me, I was able to take advantage of some of the lows in the stock market. And there was, my regret is that I didn't put everything in when it was low, low. But but at the end of the day, I met my goal and reinvested everything by November 1st. I actually wanted to do it before the US election, so I did that. Um, it was a huge lift, um, and very empowering. So now I can look at the investment platform. I can see exactly how everything is performing. I know, um, you know, how every batch that I invested, every lot, how that is doing. I mean, I can track all of that. I also track based on the dashboard that you created. So we're coming up towards the end of March, and I'll put in my first quarter numbers there, which won't be that great based on how the stock market is doing, but we're in it for the longer run. So I'm not trying to get all wigged out by that. Um, and I very likely will sell the remaining 15 mutual funds this year, and reinvest them all just to simplify our strategy and lower the realized capital gains even more. So I'm at a very different point in from where I was 2 years ago, where it was a complete mystery. I will say I've had the luxury of time to be able to do this. I haven't been working in a job, and I don't have young kids at home. Um, Certainly, I wish that I was able to do this 20 years ago, but I wasn't in a place to do it. I was at that time in the middle of child raising, and I mean, just stuff where, and I didn't know where to start. So I feel like the timing was perfect to meet you. And having done this, I feel much more confident, and it's one of the proudest accomplishments I feel like I've ever done. And I really credit the time we spent together, Lena. It was time and money well spent. So that's my story. Very long. Sorry about that.
Well, thank you so much, Julia. I think, yeah, for me, I'm feeling a little bit overwhelmed, and I'm definitely feel very proud of everything what you've done, and you deserve lots of respect and your diligence and your determination. So, congratulations.
Thank you.
I think I will just only maybe ask one question.
Yeah.
Of which advice would you give? Well, now let's make it two for
Mhm.
younger women and for women in our age.
Yeah, I think so. My first message to younger women is don't let anybody tell you you can't do this or that it's too complicated for you. It's not. Um, it's not. And I I just talked with my daughter's 23. I put together a simple spreadsheet and I showed her about how her money grows in her bank account, how her money would grow if she invested it in a fund or index fund that tracks the S&P, US S&P 500, and how much her money would grow if she added, say, $100 every month to that. Her eyes got really big when she saw what a little bit every month can do invested in something that's not her bank account. And so that my advice to women, and it doesn't have, you don't need 80 funds to do this. You can pick one thing that's just has historically been a good return and is solid, um, and stick with it. And as your earnings increase over your career, you can start to get more diversified as you want to, but just start. Just do it. Pay yourself first. And this is a huge way to do it. Secure your financial future, whether you're partnered or not. This is your life and take charge of it. So I would just say, don't be afraid. And I am really educating my own children, both of them, on or trying to. Whether they take this information or not, that's on them. But so that they will take charge of their own financial futures as well. Because I didn't get it, and I really think as parents, it's just something that we need to do for our families. Um, the other thing, so for women in their 50s, yeah, it's this whole idea, is it too late? Um, I would say it's never too late to have your money work for you. Uh, and if you can just carve out something that you can watch grow, for whatever the goal is, it's I mean, I am it's really empowering to do that. And I'm trying to reframe things in my life with um, sort of two things. One thing with money, to look at it more like a seed rather than as the fruit itself. So if you plant it, it will grow and it can do good things, for whatever purpose you've put it out there for. That's saving for a place to buy, to live, for a remodeling project or something you want to do, or a car, or whatever it is. Um, Plant the seed and let it grow. Um, and then the second thing I'm trying to do more of is just ask the question, how hard can it be to do whatever it is? You know, okay, brain surgery, that's hard. I would have to go back to school and learn how to do that. But for most things in life, it may seem hard, but really, how hard can it be? And if you just sit down, do some research, read a book, you can figure it out.
Thank you.
So
I think we couldn't finish this interview on a better phrase. How hard could it be? I love it. Thank you so much, Julia. And I really, really
welcome.
appreciate you of spending your time, sharing your story. I really hope that some women hear it and it will them. And it definitely motivates me to continue because it's a little bit lonely job I have. But yeah, it's certainly worth it when I hear stories like this.
Thanks, Lena. What a
Thank you.
pleasure.